Hi, this is Kim Watson. Welcome to this week's Big Picture. So in this video I really want to give a sort of top-down approach of what we could have in store for the week ahead. Now just to give you some sort of idea of what I'm trying to achieve here, just because I do realise that some do not really completely understand everything. I'm taking this top-down approach, looking at what the banks are doing, the biggest money, then looking at what the asset fund, hedge funds are doing, the sort of the next layer in the money, and then looking at what could be moving the money market this week, which will then give us some and then head towards a technical analysis of what's actually happening. So here's what's the big shifter, the slower money in the middle, and to the right hand side here what could be affecting us and what the current trend is technically. So that's where we're going. The principle behind it is quite simple, is trying to look at where everything's aligned. So if interest rates were rising in the US, if the asset managers and hedge fund managers were looking favorably upon the dollar, and it's trending up on a weekly and daily basis, whether you're a swing trader or an intraday trader, trading to the upside would make logical sense. If the data comes out, yeah, I mean, it may just give it the absolute boost if the data comes out that is also complementary to these factors. Now we don't know what the data is going to come out, but we certainly know when it's coming out, and that's the key thing. And obviously it would be quite the opposite. So for example, if the euro, which is pretty dire looking this way, I'm not sure what the hedge funds, and I should say the reason this is all blank at the moment is because whilst Trump has allowed people to go back to work, they haven't yet got the figures for me, so I will have a ring for them. No, they come out on the site, but we need to see these numbers here to give us an idea what's going on here. We know what's going on to a degree, and we know what's coming out this week, and we know the technical trend. So if this is all downwards, well, the real trend and the best trades may be to the downside overall. So there we go. I just wanted to recap there so you understand what the principle behind this. So it's the big picture. It is looking at what's happening on the bigger time frames maybe. And then when we're trading, and if we're trading in line with it, it may make for some more profitable trades. So as I said, the sentiment data is missing. As soon as I get that back, and if I get it back midweek, if they start popping it back on there and it comes up to date, I will maybe do an update during the week, but or include it in an update of all of its own. So let's have a look at what the Fed are pretty willing to shift policy quickly and flexibly, is what they said last time. They are meeting this coming week on the 30th. Before their meeting, we've got the GDP data out the same day, and then on Friday we've got non-farm payroll. So quite a lot of data, dollar-based data this week. In terms of the interest rate decision, well, you can see it looks like it's going. I mean, it's got a 98% chance of being left alone, which is pretty much where we'd expect it. So let's just look at the probabilities here. In fact, this year has, as we run through the year, if you look at the month on the left-hand side here, and the potential of where it will be, and it's currently sitting in this 22525 area, and you can see the probability is pretty high. It may be stuck there all year. If anything, there's a sort of a thought that it might switch the other way, but we'll see. Now, an important thing here in this week's data is I'll put the balance sheet reductions. Now, they may look at the moment they're just leaving this as an automatic. They're reducing the balance sheet that they've all the assets they bought to help the markets previously. They're just leaving that on a basic sell point. So each month a certain volume, I think 100 million or 50 million, gets sold. The intention is to or potential interest, there's been suggestion that figure may be reduced. If it does get reduced, and we see that reduced or discussed in the meeting on the 30th, that may well have effect on the stock market in terms of making it a bit more positive. And well, we'll see how it affects. It may be seen as a dovish move though for the US dollar itself, which could see it's being sold somewhat, but we'll see. Okay, Eurozone. Eurozone, last week's meeting pretty much told us what we knew, that the Eurozone is seeing growth falling backwards, and Italy's in recession, Germany's possibly knocking on the door of recession in terms of some of the numbers that are coming through there. It's not looking good, but this week, the 30th, we got the German CPI out on Wednesday. Then we've got the prelim GDP on the 31st. Now these numbers in normal circumstances, particularly the latter, doesn't count for so much normally, but everything's data dependent, and this may just sort of be the nail in the coffin in a sense. However, I've said that, and it's something to bear in mind with these markets as a whole, is for a long time the euro's been sold on the basis of what we're knowing. Now, it was interesting to see it last week. It got sold off into the speech, well into the speech, and then we saw it rally. It did pull off again, but it rallied beyond that, and it pushed in a more positive bar. Now, this could be could be a dead cat bounce, profit taking, and then panic, but short squeeze. But we'll see. There is a possibility. I mean, I've been bleak or bearish on the euro. I've been bearish on the euro for some time now, and well, it's served us us well for some time. But it may be that we're just going to end up with chop basically. The pound, well, the Brexit negotiations continue or don't continue as it may be within Parliament. It's a disaster the way they're holding it and managing it. Nobody wants to shift, and it seems that there's without knowing it, we could end up with a no-deal Brexit because they can't get their in gear. Anyway, on that note, we got Carnage speaking later on this afternoon, or he may be speaking already actually. In fact, he is speaking, I think, due to be speaking today. We've got the parliamentary Brexit vote on the 31st, normally at 7 PM. Now, I've not got the time for it, but I would imagine the vote's around about 7. And we've got the manufacturing PMI on the 1st, slightly lesser data, but all this data at the moment, all these figures are going to be market movers for now. Okay, dollar yen, no significant data coming out this week. We'll look at the technicals of that in a moment. But it's chopping basically. The Aussie dollar got the inflation out on the 30th, and that's just about it. Canadian dollar, well, it's data dependent based on oil slipping here, and the Canadian dollar's well, it's in an upward trend against the US dollar, so the US dollar CAD is in an upward trend, and there is potential that it could push back up there. We'll see. And New Zealand dollar, well, trade balance on 28th, not a lot of data coming out, so that's 9:45 this evening. Not a lots of data there at all. It's again bit data dependent. Everything is same old really. S&Ps, well, we've seen a reasonable run of those. They've gained lots of what they gave away in December, 2/3 at least. We'll see how it progresses, but let's have a look at the technicals now, and we'll start off we'll start off with the euro dollar here. Sorry, I'd left the, I beg your pardon, I will put that dollar index back on there very briefly. And you can see, I'm just looking at this sort of higher lows running through on this weekly basis here. It's not really giving us too much. I mean, it's sold off a little bit bearish, sort of pivot swing sort of thrown in there. It could sell off a little bit more. And as I said, the fact is all the news is out on the euro, and it's slowly bad news, and it's whether or not there's going to be worse news as we start getting some data now. The people are back in their jobs for 3 weeks at least. We might get some data through from the US, particularly GDP later on in the week or midweek, which may give us a sort of a different view on the the US dollar. So for a moment, this US dollar is sort of slipping down a little bit, low highs, low lows on the dailies. Weekly wise, well, it's still in a reasonable uptrend until otherwise declared. Okay. Euro dollar, well, you know what I'm going to say here, it's in a downward trend. As the euro dollar is such a large lump of the US dollar the dollar index, it does result in inverted correlation. So last week, well, it's easy almost, it's still in a downward trend overall, big picture. Short term, well, we could be pushing back up here. It's certainly got the potential to push back up here. It's snapping all over the place a little bit at the moment. It has got the weekly pivot below, which could be a draw in the earlier part of the week. Well, unless the data's worse later in the week, we'll see. But at the moment, bullish sort of candlestick yesterday could see some follow through. And as I said, I think with the negative news largely being out there, Draghi's re-emphasised that as bearish news again today. Well, it's not really killed the market too much, which suggests that we might see a little bit more positive movement on the euro. We'll see. Pound wise, well, the pound's done extremely well, bearing in mind what's happened, but it's largely built on the fact of the no deal. Looks like it's very unpopular and likely to, or potentially going to come off the table. We'll see, but we are pretty close into this weekly 50. We could see a bit more of a correction here. We're not too far from the weekly R3, and we could pitch up towards the end of the week there and bounce off there. Was looking to see if it pulls back with the uncertainty towards the weekly pivot and maybe more. It's still in this upward trend on the dailies though, and it may be that such pullbacks towards that weekly pivot, maybe back towards the daily 8, would give buying opportunities. Dollar yen. Dollar yen, well, is all I can say. A lot of sideward action across the dailies. The weeklies in almost the inside bar, not quite, just pitched up a little bit further during the week, but it's largely going sideways. It could start rolling a little bit more, but we'll see if it starts breaking down. It's hard to really see what it's doing here. I mean, it had the initial spike. Okay, it's pushed back. I wondered and thought it might push up towards the 200, the 50 above us, but at the moment there's a bearish cross going on, ironically, and it does look like it well, may roll back over to the previous range there, back towards that monthly S1. Dollar yen, and I mean any sort of weakness in it that's mentioned this week would obviously feed that downward movement. Aussie dollar. Well, it's still in a weekly downward trend. However you look at it, it's trying to get some traction. Maybe it's ended up on a sort of a positive on Friday, but much of the week was a sell-off. It just put that bullish engulfing, which made it look like it's going to continue. I'm not convinced by this one way or the other. It's still got a weekly pivot untouched below, not far away, but maybe a bit of a catalyst for me to look on the bullish side. Well, it's sort of dangerous the way this has been moving, but maybe it's simply just looking at the break of this trend line. It is sort of popped across the highs here. It just sort of retested that sort of area and was sold into earlier on. Maybe if in the beginning of the week we see a push towards that, we've got that opportunity back towards the 200. It would help if the markets were correlated and the dollar was selling against everything, of course. Canadian dollar, finally. Not nearly finally. It's still on this weekly basis, still running through these high lows, high highs, so it's not worked out of that scope at the moment. Oil's been coming off. The Canadian dollar is data and oil based reliant, and although the next interest rate is likely to be an upward side, it could well occur this year, sooner rather than later if the figures were positive. But it's, as I say, not really being helped by the oil price coming off at the moment. Well, it did look like, I mean, on Friday it sold off pretty strongly. It looked like it was going to continue back towards that daily 200. We'll see if it does, but at the moment, as I say, the softer oil price is not helping it whatsoever. New Zealand dollar, well, weekly basis, it's making a bit of a sandwich here in terms of up, down, up, back into the 50, weekly 50. It has it's confirmed a slightly higher low, which may see it push back towards those highs that we saw at the beginning of December, maybe into that 500. Alternatively, I've done this before, and well, I would look at this if it starts selling off and we see some dollar strength coming through these markets. Well, I would be really short bit below this line, but for now, but with what we're seeing there, high low, erring on the more bullish side. And finally the S&Ps. So the S&Ps futures, S&P E-minis. Well, last week it never really managed to do too much. It put a sort of graveyard doji in there, really. What's it doing at the moment? Well, chopping along pretty sideways. As I said, it had made quite a recovery. It's a third, not 2/3 or half. Actually, it was over a half of what it gave away in December, beg your pardon. So it was 2/3 the other way. So it had gained back this month, well, through into this month. But at the moment, well, consolidation. I think the meeting on the 30th will make a big difference to this. We could see rather large rally if there's a suggestion that the balance sheet reductions were to be made, in which case we could see this rally quite strongly. If it isn't, I think the market is maybe a slight bit disappointed if there's no comments on it. Even if it's not done this time, the mention of it may create some, or lack of mention of it may create some downside in it. The mention of it may give the market a decent rally. So a bit very data dependent week. I hope you have a great one. I'll speak to you next week, and of course every Monday morning with a more up-to-date outlook. Bye for now.